the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear, it's all downhill from here. Remember life, remember how it was. I'm treating Michael Jackson, all in shit. Say what up to Randy, the shoe. Say what up to Danny. Say what up to life and mortality. Running on my bikes, running on my feet. Still in granny six. Give me some sweet, which I might like immortality. This is life, life, immortality. That's the way every day goes, every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regardless, dear, If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk crate. It's the same way you showed me.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 13th, 2023. And earlier this morning, Bitcoin did something very, very important. It held crucial support, okay? It wasn't just Bitcoin. Obviously, we use Bitcoin as a proxy for the cryptocurrency markets, but it was, very important that the cryptocurrency market in general hold that support, okay? And the support I'm talking about, of course, is this level right here, okay? Actually, not that level. Let's zoom out a little bit. It is actually the support level of this channel right here, okay? This channel that we've been in for a few days now. How long has it been? It's been, well, no, actually this is this is since Thursday. Yeah, that's right. Since Thursday. So approximately 4 days now. We've been in this channel, and we want to hold support of this channel, right? If we lost the channel, it wouldn't be the end of the world, okay? It would not be the end of the world. Still, on the high time frames, we're bullish. We do not break market structure. Some people claim, I don't know what charts they're looking at, but very few people seem to have other time frames other than the 2-minute, 3-minute charts on their trading view for some reason, because I don't know, if you zoom out a little bit, you can clearly see it's a massive uptrend followed by a relatively, pedestrian, run-of-the-mill retracement, okay? So even, like I said, even if we lost the support of this level right here, we'd still be bullish, only because this is such a massive uptrend. And, the retracement to invalidate this as a legitimate impulsive move is the 0618 of the whole entire thing, which would be all the way down at $18,900, okay? So that in this region, we would have to come all the way down to this region for this to no longer be bullish, a bullish impulse, meaning, 53535 impulsive wave that we see in Elliott wave theory. And why the 618? Okay, a lot of people pull fibs not really understanding what that means, right? A lot of traders pull fibs from random places to other random places, okay? Still, because math is so powerful, you can still see some relationships, some patterns. But the beautiful thing about Elliott wave theory is when we pull fibs, we pull them in a regular sort of a standard way where we're taking the low and the high of a run, and so we understand that the retracement of that gives us regular patterns, okay? It's not just that it exists in Elliott wave theory, it's just that Elliott wave theory has standardized certain principles with which we can better understand these retracement levels. What does that mean? And Gann does the same thing. I'm not just saying Elliott wave theory is the only freaking system that uses retracements. And you can use retracements way outside, like I said. It's just standard ways to understand retracement levels. There's not that much in the way of a sound understanding of what the golden pocket means, right? Literally, the golden pocket in Elliott wave theory is so important because when you're talking about a 53535 impulse, if your retracement happens beyond the golden pocket, let's pull that again, then you're not in impulse, right? That invalidates the 53535 impulse move, okay? Because we know wave 2 cannot retrace significantly beyond the 0618, okay? And then when you talk about a wave 4, your wave 4 retracement only comes into this region, the 236 to 382 region, okay? So that's kind of the cool thing about Elliott wave theory. It's just we have certain standard measurements for these different waveforms and where they fall, so we understand when we're talking about golden mean retracements in a purported impulse, a retracement beyond that point would essentially invalidate it, making it definitely a corrective wave. We would say that then this has gone up correctively. This can then now come down correctively to the minimum 786 and beyond, okay? So that's the idea why you're really bullish for a long time. Like, you have so much room to play here to remain bullish long term. Why do I talk about the long term? I talk about the long term because it's important, guys. It's important to keep a frame of reference. It's important to understand what you're looking at, right? So many analysts, so many traders are on the 1 minute time frame, 3 minute time frame. They're doing good work, some of them. A lot of them aren't, but some of them are, okay? And they're telling you it's going up, it's going down, it's going up, it's going down. They're publishing multiple videos a day saying it's going up now, oh, it's bearish now, it's bullish now, it's bearish now. You can't trade like that. Well, you can, but you increase your risk, you increase all of the different variables, so you're less likely to be consistent. Okay, you can have a consistent method on the short time frames, small time frames, with good risk management, all that stuff. Yeah, but are you trading literally 20 hours a day or 18 hours a day? If you're not, in such a volatile market, it's going to be difficult to be a profitable trader. Profitable means you're making more than you lose. Yeah. I want to say this because it's important. I know a lot of people, some people watch this channel because they're genuinely interested in improving their skills in technical analysis, and they're interested in, somebody else's take on the market. Others are looking for calls, and they're looking for, is it going to go up? Is it going to go down? Should I buy? Should I not? Right? So I'm addressing trading because a lot of us trade, and some of us trade using leverage. Okay? So I'm going to say this much, and I've been doing this for quite some time. And when I say quite some time, it doesn't mean I've been doing it for 20 years. No, I've been doing it for maybe 100,000 plus hours. I'm going to count it in hours, because it's not about how long you do it in terms of how many years you've been doing it. It's how long you've actively been doing it. I've been actively trading for longer than I've been doing a lot of things in life. So when I speak from experience here, I really have done it all. I've traded the minute time frame, the sub-minute time frame. I've traded the high time frames. I've traded it all. And I can tell you I'm much more profitable with what my outlook on the market is, as I presented on this channel, which is you look and you zoom out and you formulate a high time frame thesis on what the market is likely doing, okay? When you do that, you give yourself a better chance of succeeding, because you're not so confused at what's going on in the vagaries of the small time frames. On a small time frame, it's going to go up and down, up and down, and up and down, just like it should. But on the higher time frames, it's just going to, we're just still going up. Do you understand? And if and when this resumes, whoops, didn't mean to do that. If and when this resumes and we go up again, then this will have been a little blip. But I guarantee you, so many traders got chopped up and destroyed and lost almost all of their capitals trading on leverage in this scenario. Or a lot of people got discouraged and thought, crypto's going down again, I'm not going to get involved, completely ignoring the obvious trend, right? Which is the uptrend. So this is why I wanted to start with this, okay? Always understand what you're looking at on a high time frame. And again, this may not be exactly as I annotated it. I may be off a little bit with this being a flat correction up until here. Maybe it comes down a little more. I don't think so, though, and we're going to talk about that in a second. But the idea is high time frame thesis, formulate a bias, meaning if it's a high time frame bullish thesis, you know that, if you're thinking long, you're more than likely going to be correct. You're just skewing your probabilities. You're not talking about possibilities. A lot of people like to talk about, you got to look at if it's going up, if it's going down. That's bullshit, because it can always go up, it can always go down, it can always go left, it can always go right. There's all kinds of possibilities. You want to look at the most likely probabilities and trade that. That makes no sense. And that's how you can make money. I don't do what a lot of other channels do, meaning I don't publish my active trades. I could. Sometimes, like just a few minutes ago, somebody was talking shit to me on Twitter. I just posted one of my trades just to shut them up with no explanation. I could. If I posted the active trades, leverage trades that I have, maybe a lot of people would be surprised. Like, what the hell? That is crazy. But I guarantee you, you can be very profitable by taking a high time frame view on the market and then zooming in to make entries. And you don't have to overtrade the market. I guarantee you don't have to overtrade the market. And another thing I'll say about that is you can't always trade the same way. A lot of traders trade the same way no matter what phase of the market they're in. And this is also something I learned from experience. There are different phases of the market. How many times have you heard on the street, sometimes at a prop firm, I don't know if you study trading, if you study trading and trading psychology and you study traders, the Dows, the Minervinis, you know exactly what I'm saying. When a trader says, I had this system, especially rules-based traders typically say this. I had this system, it was going well, it was giving me this kind of return, right? Risk to reward ratio was like this, all that stuff. My P&L was like this. But then all of a sudden, it didn't work anymore. Why is that? It's because the market, like everything else in life, goes through seasons, goes through phases, okay? So let me give you a quick example. And I hope this is helpful and useful for those of us that are trading, some of us even trading on spot, so you can understand why some things work the way they work and why I present information the way I do on this channel. It's not only educational. Obviously, I'm trying to make money and I'm doing a good job. So far, so good. So I just want you to understand, you don't have to do it like me, and everybody's going to be different. But the general mentality as to why I'm so bullish and why I've been so bullish for so long is because of the market structure. It's dictated by the high time frame read on the market, which is past 234 days, sideways. I know it's going down a little bit, but it's essentially sideways, okay? So in this kind of market, who's going to do the best? Those traders that are range traders, that like to trade divergences, that look at everything in a range. They look at everything in the range. That's how they think. That's how their brain works. That's how they've been successful in the market. And so they're literally hardwired to only do that. A lot of times, they don't know what a trend is. They can't even trade a trend. They can't even spell trend. And that's fine. But they suffer in a trending market, actually. They do best if you look, if they actually broke down, and I don't know, some people do this, some people don't. But if they looked at their numbers, they looked at their P&Ls, they tracked their progress, they would see that in phases of the market that have gone sideways and we've been ranging, they do better than when the market trends. Okay? And so, what do you do here? You buy support, you sell resistance. You buy support, you sell resistance, blah, blah, blah. Rinse and repeat, okay? Those traders love these kinds of accumulation markets or distribution markets. That's what they thrive in. They go up and down at the same time. They hedge, all that stuff, okay? Now, where they suffer, or, sorry, that's not my point. My point is, that's one way to trade this. My way of trading that was to accumulate. I wasn't trading up and down. I only had one trade, one button. My sell button was broken because for me, it's too risky to buy and sell this on a low time frame, and the return on investment is so much lower because I understand, having read the market on an even higher time frame, weekly or monthly, that this was very likely, very probably an accumulation range. So I was better served not making money here. Actually, I delay my gratification. I have a bigger plan, okay? I'm playing chess, not checkers, because I do have the skills to range trade. I could long and short and long and short and long and short, right? But my focus was in accumulating the bottoms of these moves in a variety of assets throughout the cryptocurrency markets. And I built a portfolio over the course of 200, 300 days of maybe 20 some odd assets that were accumulated in these regions, which is why even after a move like this, I'm very green in most of my trades. The only ones that I have a few that I got in late around around here. I got in late where, okay, they're a little in the red. But all in all, I mean this to say, strategy, guys. What's your goal? Is your goal to make 50, 100 bucks? You know? And it also depends on how much you're putting in, right? If you're putting in millions of dollars, obviously you're going to make a lot more. But then you're going to take a lot more risk, yeah? But if you put in a little money here and there, don't waste your time going up and down unless you want to do it for the exercise, and that's fun. Everybody's different. I hated my time day trading the crypto markets, right? I hated getting a little sleep and having to check my trades ever so often, not ever so often, like every waking hour, being nervous. I hated it. I much preferred really calculating my, and when I say I accumulated positions, I mean on leverage. Not, I accumulated some spot, but on leverage, okay? So it took a decent amount of skill to not get chopped up and keep leveraged positions. And I have not just 2x, 3x. Check my Twitter if you're interested. The type of leverage I'm dealing with. It takes a high degree of precision, high degree of accuracy to snipe some of these entries. That's where I go on the small time frames, okay? But again, I don't care what people think about me on social media, Twitter, whatever. All I care about is my final result, because I have bigger plans way past crypto, way past, getting it, building my YouTube following or my Twitter follow. I don't give a damn about that, right? So the idea is, I'm saying all of this because maybe you are one of those traders that only sees channels. That's all you see. Market going up and down. Guess what? There are it depends. Okay, let's say there are 3 phases of the market. Okay, you can explain it in 4, you can explain it in 2, you can explain it in 3. 3 phases of the market. Sometimes you're going to go sideways. Okay, you're going to trade sideways, up and down and up and down and up and down. In a defined range, you're not posting any discernible trend. Okay, everything is kind of up in the air. It's really hard to say. You can't really judge. And when you're talking about all of these corrective patterns, like there's so many different permutations, combinations you could take. It's really, really, you have to like read and react. It's less predictive. It's more read and react. Okay, that happened. Okay, you wait for the confirmation. Okay, that happened. Boom, you get in. And then you're always on your toes waiting for the other shoe to drop, because by definition, you're in a capricious, very volatile, minefield of a market that's going up and down and up and down and up and down, where your stops can get hit at any time. It's actually, most people, this is chop. I know traders, very successful traders, that refuse to trade when the market's like this. They just put it down. And you know why? Because in their training, they looked at their numbers, they looked at their results, and every single time they attempted to trade these kinds of markets, their numbers, their risk reward, the amount of money they were making versus the amount of money they were losing was not worth it. And so they lost more than they gained. That's what I'm trying to say. So they swore those kinds of markets off. Most people cannot trade this. Some people can. Some people do have the skills. But again, you really have to be on it and set timers and alarms, and you got to be on the small time frames. You got to be attentive, super attentive. Now, once you get, that's one phase of the market. The other phase of the market is going up. It's what we call up only, but obviously nothing goes up in a straight line. Everything goes up with some interwave correction, okay? So that is another phase of the market. And then the last phase is obviously the opposite. You're going down in the same way, impulsively. So in a sense, do you see how I can say there's 2 phases of the market, either sideways or impulsive? Or you can say there's up, down, and sideways. Or you could say there's 4. There's up, down, sideways accumulation, or sideways distribution. This would be sideways accumulation, meaning you go from down back to up. And sideways distribution is exactly the same thing, but opposite, right? You go from up to down, okay? So knowing what phase of the market you're in on the high time frame is so important. So many traders all over the internet will do an analysis, even a high time frame analysis, and they'll be like still not having developed a clear thesis. You can be careful but still have a well-defined thesis. If your thesis in this market is it could go up or down, then you're hedging forever. And there's just so much you can hedge before you're non-committal. And that's more like what beginners do. You're non-committal, so you can't really build with conviction to get the gains you want. You're going to hedge everything. Everything's going to be a short-term trade. You're going to take profits early 2 months. I'm talking trading psychology, because guys, I'm trying to tell you, like, I took trading and I still take trading very seriously. Reading up on trading, and I'm not just talking about crypto trading. I'm reading up on trading in general, right? Reading about what the legendary traders did, how they thought, right? How they approached trading, how they approached reading markets, all that stuff, right? Don't get get it twisted. People think like, somebody like Garrett Soloway, no offense, is like the best trader, right? Because he's on TV all the time and people say that. Like, there are really, really good traders out there. Open up a book, okay? Crypto Twitter probably doesn't know, or the crypto sphere doesn't really understand that there are legendary traders that came before us, right? W.D. Gann, Ralph Nelson, Elliott. Elliott was more of an analyst than a trader, but there are some legendary traders out there, okay? You can learn from them. They have books that they authored themselves. There are other books, I always talk about my mentor, Jack Schwager. He pretty much compiles anecdotes and stories from the best traders in the world. And how does he define who the best trader in the world is? It's not how many TV appearances they have or how many times they show up on BitBoy's channel. It's they have to show him at least 10 years of P&L data, 10 years of profit and loss data, and they have to be proven to be profitable. Do you understand what I'm saying? Like, if you want to take trading seriously and you really want to learn this stuff and you want to get good and you want to be profitable, be very careful just opening up your YouTube feed and just, copying whatever you see on some random channel that's being pumped by the algorithm. I guarantee you, a lot of traders are inexperienced, one-dimensional. What works for them may not work for you, and maybe they're not even profitable. Let me say that. Maybe they're not even profitable. There are not that many profitable traders out there by the numbers. Please understand that. Hello, Akansha. What's up? Hope you're well. Akansha says hello. So, yeah, I felt like that was important to say because, right now we're seeing Bitcoin in a range, okay? And everybody has so many opinions on what's going to happen. That's normal. And a lot of people, most people are saying this is going to break down. They've been saying this was going to break down. But since last week, I've been saying this is likely an accumulation channel. Actually, if I'm being honest, I was saying that up here too, right? Where? Up here. And we broke down from it, right? I was wrong. I thought this was accumulation and we broke down from it. So that's fine. Because why am I saying that? Please understand, I'm looking to be bullish. I'm looking for reasons to be bullish, and there's nothing wrong with that. I'm reading with a bullish bias because of my high time frame read. And so far, that has proven very, very profitable. Now, yes, you shouldn't lie to yourself. Even if you have a bias, you should, clearly state you have a bias, and I do have a bias. Thing is, once we started breaking down from here, I think it was right on stream, I was like, nope, this is going down. And it went down, okay? Now we're in this new position. This looks like another accumulation channel, but it's hard to say sometimes because accumulation channels can just be consolidation channels or distribution channels, right? And they're corrective waves, so they can look like a lot of different things. But here, what we have is a range, like I said, that we've been in for 4 days, and every single time we've come down to these levels, we've shown strength. And the most important instance of showing strength in that regard is what I circled in the thumbnail. This one. Why? Because, as you can see, we've significantly broke down from the base, which is about at this level, right? You have 1 touch here, 2 touches here, 3, 4, 5 on the hourly time frame. You came down a little bit more. That is what we would call a spring in Wyckoff trading, or what order block people would call fishing for liquidity. Okay, you go below, a little bit below support, and you look for liquidity, and you put a bear trap in, or basically the stops The longs that have stops right below the support get hit, okay? Also, for people who think that this is going to break down, they enter shorts, they get trapped here, okay? That happens all the time. That happens all the time. So this is a commonplace occurrence in a trading range. And the fact now that we've bounced very nicely up to here and now are consolidating at resistance is a good sign. I know some people may say, oh, we rejected from here, from the midline. No, we didn't reject. A rejection is a three-wave move, and it is a rejection. Like, this is a rejection, or this is a rejection, right? 1, 2, 3. 1, 2, 3. Do you see? A three-wave move is a rejection. This is a rejection. 1, 2, 3. This is a consolidation at resistance, which is bullish, right? You're essentially flagging. You're flagging. You're consolidating at resistance to break resistance, okay? So that's a really good sign, okay? The other thing is we expect resistance at the midline because in a channel trade, the top is resistance, the bottom support, the midline is resistance when you're below it, support when you're above it. So that's exactly what we expect. Now, as I said yesterday, we do expect to ultimately break this channel to the upside because if this is indeed accumulation, then it's going to yield a move here, retest, and now we resume the larger trend. That's what we're waiting for, okay? So that's basically what I'm seeing on Bitcoin. And for the past 4 days, you'll see a lot of opinions in the market, a lot of people saying this and that, but actually nothing's happened. There are people who have gone short, long, short, long, short. I guarantee they've been stopped out a whole bunch of times in doing that. Maybe they're up, maybe they're not. Maybe they're not even doing well in that trade. Again, very few people trade channels well. Some people do, but that's what they're looking for. The margins of error are very low, and the gain on the investment is relatively low. So for most people, these are not good areas to trade. They're good areas to figure out what the price is doing next. For most people, okay, what you want to trade is impulse. If you want to short these kinds of things. If you want to long this kind of thing. Do you see what I mean? So the channel is your time to either accumulate or distribute, right? Distribute if you're going to break down, accumulate if you're breaking up. So that's why I've been reading this as bullish, even though in the past 4 days, we've been down and down, right? We went down, up, down. People say, oh, how can you still be bullish? Well, we're in a channel, and the channel is potentially accumulation, okay? And if it is indeed accumulation, then it would make sense to accumulate positions. And how do you accumulate positions in a channel? This is how you do it. But most people won't do it this way. You know why? Because it's scary. And I'm going to show you. It's so simple, but this is trading psychology again. You want to buy support, okay? And I always say on this channel, I'm never afraid to buy support, and that's a lie. Because I'm scared shitless to buy support. Even today, I'm scared shitless. But I still do it because I understand what that means. And I try to turn my fear off when I do it, okay? If I were to trade it, okay? That's what I want to do. I want to buy support. Another way to trade this is you wait for the breakup and the retest. Because if this is indeed a channel, which it is, right? You're going to have to, at some point in time, break the channel to the upside. And what you have to do, because this is legitimate, significant resistance, and it has been for the past 4 days, you're going to have to retest it as support. So that would be a great entry, okay? But another way, you can either enter on the bottom of the channel or on the retest for the move up. So that's like theoretically what you want to do. Obviously, easier said than done, because it begs the question, when is that going to happen? When is this going to happen, right? You can set alarms, I guess. You can keep monitoring, but it takes patience. It takes a certain level of attention to the markets to execute that entry. And yeah, so that's pretty much it. You're at support. We're gonna look now throughout the market, look at different assets and see what they've been doing. Not everything's exactly in this sort of channel, but a lot of things are, and it's looking promising for a move to the upside, right? All right, so on the other hand, or similarly, or I don't know how to segue linguistically here, we also want to look at the DXY, right? That's our main indicator. And what were we saying the other day is that the DXY is at resistance, okay? We were on the daily time frame, and we showed how there's this massive 80-day resistance that proved resistance multiple times for the DXY. Every single time the DXY came to this level, got rejected, okay? So we were likely to get rejected once more. If ever we didn't get rejected there, we also have a 300 plus day resistance up here. So it's unlikely that the DXY was going to do much of anything in this region. We're expecting a move down. So on the smaller time frames, you can see we've already started that rejection, and the DXY has been falling for the past four hourly candles, meaning for the past for the past 16 hours, right? So you can see here, resistance tested once, retested in a 3-wave move. We know 3 waves is corrective. And so another bit of wick up and a rejection. So you should expect this to continue to the downside. Again, the DXY US dollar currency index is inversely related, yes, I was correct in the first time, to risk on assets, Bitcoin, cryptocurrencies. So we should expect cryptos to rise as this trend continues. Again, this is a high time frame read, a relatively high time frame, right? We're looking at the 4 hourly and the hourly. This does inform your trades. It should inform your trades to a certain degree, because understanding that it's likely that the DXY reject at resistance just lets you know, okay, my bullish bias for crypto on the hourly or the 4 hourly or whatever time frame you're looking at the DXY on is now even more supported. Do you see how that works? You don't have to look at the S&P. Again, S&P, NASDAQ, all that stuff, it moves off of the DXY, not the other way around. So all you have to do is understand the dollar. You don't even have to tune into the CPI. You can if you want to, but all of that stuff goes into what the DXY is doing, okay? And generally speaking, if you're able to correctly read the trends on the US dollar currency index, you will see that play out. Now, as for the small time frame moves, the ups and downs, yeah, that may be affected by some assertion, some news, some announcement, right? FOMC or whatever, raising of the CPI or whatever you want, right? But in general, the trend that you're reading on the chart will play out. So even if it goes up a little bit, it's going to come back down, because that's what the chart is telling you. Show me the chart, I'll tell you the news. That's the beauty of just, being able to be chart literate. Okay, back to crypto. We're at this level here with Bitcoin, and let's even zoom in to the 15-minute time frame. Okay, on the 15-minute time frame, like I said, you can see some consolidation at resistance, which is always good. And this here may be, I don't know for sure, this may be a corrective, sort of zigzag that you're putting in, or it may be a wave 1, wave 2 situation, wave 1, wave 2 situation of the smaller degree. Okay, let's go on even smaller time frame, 5-minute time frame, and it looks like it's the latter, meaning it looks, according to this chart on the 5-minute time frame, that this was impulsive and this was corrective. Why? Because this came up and rejected, and took about as long as it took to come down, as about as long a time it took to come down to go up. So we can count here about 55 minutes on the way up, and on the way down about 55 minutes. Do you see how that works? Waves of the same degree are comparable in time and in price, right? And you have your price comparability, because if you measure, you can see here, you came down to the minimum 382 Fibonacci retracement level, your maximum 618. So that is a relatively run-of-the-mill legal Elliott wave impulse. So that's possible that we've already entered impulse, okay? Here, you see it's a weird, maybe it's the same thing, but on the smaller time frame. Okay, same thing on the smaller time frame. You do the same analysis. You would look at the time it took to go up, time it took to go down, and then you would measure that retracement to come between the 382 and the 618. Okay, so that's how you can pretty much say that this is a wave 1, wave 2, another wave 1, wave 2, but of a smaller degree. Okay, so that's what kind of I'm seeing on the really small time frames. Not exactly sure, but it's likely. Okay. One other thing I want to do before I go to the other assets is I want to look at volume. You haven't seen me, and nobody said this, but earlier in my career, I used to always have the volume up, because I learned from many traders, from many textbooks, from my studies, that volume was an important indicator. It's so important because, for instance, you can't do good Wyckoff analysis without the volume, okay? Volumetric analysis is everything. But I stopped using volume. Why? I just want to talk about this because it's not as reliable as it used to be, and I have a theory as to why, okay? A lot of times we see crypto markets with low liquidity, okay? Low liquidity like we've never seen before. Why? Because this is the democratization, of finance, where we can market make so much more efficiently than before. So before, you may have had many thousands of people or companies or whatever involved trading an asset, and they had to be publicly traded or whatever. Nowadays, somebody can make an asset, make a token, trade it, and there could be just a few players. So the volume's not reliable. It's not what it used to be, okay? And now, also with cryptocurrencies, you have a slew of exchanges, okay? So you're not just trading Bitcoin on Coinbase, you're not just trading Bitcoin on Kraken, on KuCoin, on Femex. You can trade Bitcoin all over the place. So the volume here is not going to be the same as the volume over there. Do you understand? And then you have all of these paper trades, and you have the insertion of leverage. So this is, to me, why I don't use volume, because when I look at it, it's like, it's not consistent. Volume, it should tell you, and a lot of people make these analyses, and they're not wrong, but they don't get that the volume is not a reliable indicator in a lot of crypto markets. Not everyone, a lot of them, okay? I think if you turn on the Coinbase volume for Bitcoin or Litecoin or something like that, you're getting more reliable, more classical volume patterning. But in most markets, it's just here and there and everywhere, okay? You can still get some information, like volume spikes here for moves that are capitulative, but by and large, you're not getting that much information from a volumetric analysis, at least in my opinion. If you guys think otherwise, please let me know. If you're a trader or a chartist that uses volume and you've been consistently seeing good indications from volume, then let me know. Otherwise, I haven't, and so I think midway through my studies, or after a while, I was like, this is useless. It's not giving me anything, because it's neither here nor there. Like, we're always told, look for the breakout volume or something like that, and the volume should go like this and then like that. Like there's all these different ways to read volume, and it's set to be a real-time indicator, but the volume's not real-time. And typically in these crypto markets, what happens is there's no volume until there is, meaning you don't see the move through the volume. The volume's kind of just shows up all of a sudden. So anyway, that's my kind of my take on volume. That's why you don't see me using volume that much these days. I just don't. And mind you, a lot of your favorite indicators are coded using volume, right? A lot of your favorite indicators are coded using volume. Be careful. Depends what volume they're using. If they're using some random exchanges volume, that indicator may not be as accurate as people think it is. Okay. So yeah, now let's look throughout the market and look at what the rest of the assets are doing. Like I said, we've been in a range for 4 days. Most things have also been ranging in their own way for 4 days. And what's happening now, generally speaking, is that I think we started going into impulse. And if this move plays out and we get a move up here and a retest there and then a continued move up, I believe that is the markup. This is the markup of this entire range. I thought yesterday or 2 days ago that this was it. But what happened is we broke back down. And as you can see, we didn't properly retest. We broke up, but we didn't properly retest this resistance as support. Okay? I actually had the channel drawn a little differently, but you'll see that now it seems to be more accurate of a representation of this channel. Okay? And you could see that we actually didn't retest the top as support. And so we managed to break down, which I didn't expect. We found support on the midline. We broke down from that, found that as resistance, found support there. That's resistance. You see, it's run-of-the-mill channel trading, okay? And last thing I'll say is, remember, when I first drew this channel, it was inaccurate. So even when you are drawing a channel, it's not to say that, you're obviously making an interpretive. I think it was something like this I had it as. I was interpreting the channel as being something like this, I believe. Okay. And that's not the channel. Yeah? But, we do our best. But that doesn't mean that the concepts or the principles of retesting a level, if you broke it, doesn't work. It means that my channel was off. That's what I wanted to point out. Okay, anyway. Hope this is all helpful and you can learn from my mistakes as well as my successes. So that's why I point all of this stuff out. Moving on. Cardano. So again, this is kind of a space we've been in, and I'm on the 15-minute chart, so a relatively small time frame, but you can see Cardano's also been in a range for 4 days, okay? And if you zoom out, it's also in a massive uptrend, okay? It's also in a massive uptrend. Those people patting themselves on the back for trading a 10% move to the downside when they missed an 80% move to the upside or whatever this is, whatever. At the end of the day, trading against the trend will get you only so far, okay? There are some people, mind you, who, after having traded for long enough, know themselves, and they know that they don't make money going long. They only make money going short, or they're more comfortable going short, so they only go short. So even though they recognize and understand that this went up maybe 80%, I don't know how much it went up, but it went up significantly, and this went down only 10%, they're only going to trade this because they know themselves as traders, and they've studied their previous, that's what they're comfortable with. Do you understand? So, but not everybody's like that, and most average, YouTubers don't even, they don't even study themselves. They don't even have data on, their trades or whatever. They don't know their tendencies, and that's fine. But all I'm saying is, if people are bragging about the latest move, a lot of times it's because they missed out on the bigger move, and they have a high time frame bearish bias. This confirms it, so they were able to see this, but they missed this. Do you see what I mean? All right. So as I said, it's just like Bitcoin, very high time frame bullish trend, right? Big move up, a little move down, and that little move down seems to have found support at this level. Okay, and so for the past 4 days, you can see we've been in this range. And would I call this a range? Yes, I would. I would call this a range, even though you can say that the range broke over here. You can say that the range broke over here. They're not all going to be the same. I think in this case of Cardano, you're looking at a possible. Let me see. I'm thinking about this. 1 second. Yeah, this is a range. This is a range, and it works. I'm going to tell you why it works. Okay, and this is tough. This is tough to trade. Very tough to trade. And I'm going to tell you why it's really tough to trade. It's because of this move right here. This is a deceptive move, and it's actually what Cardano did on the higher time frame. If you remember, before it marked up in January, it did the same thing, right? Different assets have tendencies. It broke down significantly below the range bottom, creating that bear trap, and then briefly or swiftly thereafter broke up back above that support level. So the way I'm reading this is the following. You have your initial break of structure here, okay, which is your 3-wave move up to start your accumulation channel. You have your B wave, which is your counter to your first degree initial break of structure. You have an A wave, a smaller A wave of your second degree here, and then you have a smaller B wave of your second degree here. This is your pivot. This move breaking the support and testing liquidity below support was your pivot. That's why it's tricky, okay? But essentially, this is all one contiguous range. And the reason it's contiguous is because this second degree A wave, if you take the Fibonacci retracement of it from the bottom to the top, you can see that we stayed within the phi ratio, or the 1.618 Fibonacci retracement level of that initial A wave. So this B wave is a 3-wave move, zigzag, 1, 2, 3. It's valid. It's perfectly valid. Okay? It did not break this mathematical structure. This is why this is one contiguous wave, but it's tough to trade. But this is, for example, one of the trades that, for me, there's nothing to be done. I'm just kind of, remember when I said earlier, a couple weeks ago, maybe a few weeks ago, it's all downhill from here, meaning it's like easy from here. This is what that means. On the higher time frames, let's go on before early. On the higher time frames, if you accumulated at most any point in this range, actually any point of this range, you're in profit. You had 200 to 300, you had like 300 days, almost 300 days to accumulate during this bear market for Cardano. If you did, you enjoyed this move up, and this retracement doesn't even come close to threatening your profit, right? You're still well within profit. So for me, yes, this happened and I'm observing, but there's nothing to be done, right? So I could still post my position, my leverage position. I'm not saying everybody do leverage. Again, leverage is for advanced traders only. And if you're not advanced, you're doing leverage, you should be learning and doing it in such a way that you're using small positions, and you're really managing risk, and you're doing it with the idea of getting used to it and getting better and all that stuff. Anyway, if you did accumulate at any time during this bear market, none of this of the past few days, right, of the past week in February, this modest retracement, it doesn't affect you in the least. Do you see what I mean? So this is why I'm saying this is easy. There's nothing to do here, okay? And when a trade is in profit, all it is, especially on leverage, all you need to do is manage it. Manage the fees, manage anything you need to manage, and get out of the way. Less is more, right? Because on a high time frame, if you read the chart, there's high probability, right? Again, everything's probabilistic, but high probability that this trend continues and that you make life-changing wealth on one trade. Okay? The hard part was the entry if you were doing this on leverage, right? Trying to enter in this minefield of accumulation. Okay? But once you did, you're scot-free, because once you get into impulse, everything's that much easier to read. You take your Fibonacci retracement tool and you hide behind that 0618, right? Because we understand, according to LUA theory, if you're indeed dealing with a legitimate impulse, that you are going to retrace, be above the 0618 level, okay? And last thing I'll say about Cardano here is my eye is looking at this as an ending diagonal. Yeah, I could leave that on here. This is an ending diagonal of some sort. Yeah, my eye's looking at this as an ending diagonal, but actually stopping around here. And then that retracement starts boom, boom, boom in 3 waves like that. Okay? That's how I'm seeing it. Could be wrong, but that's how I'm seeing it. So, yeah. That's that. And again, hopefully this helps. It's not sexy. I understand a lot of people are drawn to now instant results. Let's go on the 2-minute chart and let's get instant results. Let's get into the green, baby. Let's go. Exciting. It's going up. It's going down. It's going up. It's going down. That tends to lead to bad results. It can be done. Let me tell you, there are some people, very few people, but there are some people out there that can be and are profitable doing that. The majority of people in cryptocurrency or in any market that are trading on the smaller time frames, every move up and down, are not making money. You know how they're making money? On YouTube engagement, on Twitch engagement, on you signing up for, their referral links, signing up for their courses. That's it. Please do not get fooled. Profitable trading is typically high time frame, slow, boring, right? And you're just waiting most of the time. You're just waiting. You formulate a thesis, the thesis starts to play out, and most of the time you just wait. You wait. And after a couple weeks, couple months, whatever the time frame of the trade, then you earn your profit. So I hope that helps some people out there, because I struggled a lot trying to figure all of this out. And again, this is for me. This is what works for me. This is true for me. Doesn't mean it's true for you. Maybe you're that person who likes to trade the minute chart, 2-minute chart, and is good at it. But again, the more variables you add to the equation, the more trades you add, the more chances you add for you're being wrong. And the more you trade, usually, the more errors you can make. More errors you can make, the more money you're likely to lose, by being wrong or missing opportunities where you could have just sat on your hands. Okay, enough of that. Looking at Algorand, we're seeing a similar thing here on the high time frames. I would see this as a leading diagonal actually ending here. Yeah, something like this. Right? The more candles print, the more this makes sense. But again, the idea is, generally speaking, you're in a very nice uptrend. And you've just printed a nice retest of an important level. Again, support and resistance trading. This is what it all breaks down to. You break resistance, you retest it as support. You double tested it right there. You should expect a continuation of the move. Yep. That's pretty much it. You can make it more difficult. We can add divergences. We can add some music in the background. We can go on the minute chart and try and, long and short all these little moves here. But that's not profitable trading. Profitable trading is recognizing the trend and trading with the trend. Less is more. Work smarter, not harder. Because I guarantee you, the small time frame trading, it really is an adrenaline rush. But, I mean, it is very, very challenging. And the rewards are so little compared to other versions, right? Like, for instance, you're not always going to be in a trending market. You're not always going to have the opportunity to trade a trending market. So sometimes you do have to trade sideways markets. But if you have a high time frame trending market that is about to take place, like here, for instance, Bonk. So many people talk about Bonk. So many people say it's a scam. So many people say, oh, be careful. I've heard so many influencers say, be careful. I told you guys, don't get into Bonk. It's down, 89%, 80%, 85% rather from the all-time high. I told you not to get into it. It's a scam. Because they can't read a chart. If you can read a chart, there's nothing scammy about this, right? Any token that is released onto the open market typically experiences a sell-off. And that is simply explained by people wanting to take profit, right? If it's a fair market launch and it was airdropped to, people in a community or whatever, they're like, oh, free money. And they just take profit, right? They're playing checkers, not chess. If they were playing chess, they'd understand what market phase we were in, okay? Because if you realize our market phase, there's no way you're selling a very popular meme coin when it first dumps into the beginning of a crypto bull market. You don't do it. That's suicide. I guarantee you, it's highly likely that 2 months, 3 months from now, people will remember the stories about the people who said, oh, I bought $500 of SHIB, I bought $500 of Doge, and I'm a millionaire. People will have the same stories about Bonk. But I didn't know at the time. It went up a little bit and I sold it because I was like, it's a shit coin. People have no clue. If you read charts, if you're chart literate, you recognize this very simply as being a beautiful, very serious accumulation channel. Okay? Even Cardano, and Cardano is a serious project, great project. I love Cardano. Even Cardano doesn't have the market structure that this has. Look at this. It's almost like textbook accumulation, right? You sold off, right? And now you took the time to accumulate in a well-defined, super well-defined, beautiful sideways channel, okay? For my people who like Wyckoff, go look up Wyckoff accumulation channel and look at this. For my people who like Elliott wave, it's 2 degrees of AB basing and a pivot. An initial break of structure, right? Your A wave targeting wave 4 of the previous trend. And then a counter, right? Every wave has a counter. Every corrective wave has a counter. So that's your initial degree of AB basing. That's big A, small b, or sorry, big A, big B, as I've called it on this channel. And then you can call this as your secondary, right? A and B, right? That's 2 degrees of AB basing. So that's small a, small b. Here is your pivot. You're literally at support. What I say at the beginning of the stream, don't be afraid to buy support, okay? You can be afraid, but do it. Not financial advice, but it's financial advice. Most people don't buy support. Why? Because it's scary. Because all you got to do is break it, and then you go to Goblin Town. And nobody wants to go to Goblin Town, right? So people are afraid to buy support. Whereas that's exactly when you want to buy. You don't want to buy any other time, okay? Other time you want to buy maybe is a break of the channel and then a retest of it, right? Like right there. But otherwise, and then maybe like, yeah, that's pretty much it. In terms of channel trading, you want to buy the support of the channel or the break of the top resistance and the retest of it. But this is such a beautiful chart. People who talk, negatively about bonk, technically don't know how to read a chart, because this is as textbook accumulation, serious accumulation, not scammy as it comes. And I'm the more I look at this chart, and I call it my favorite shitcoin, right? And I say that in an endearing way. It's my favorite shitcoin because I haven't seen a shitcoin, something so volatile, that's so low market cap, with this strong of a market structure. Typically, we'll see it, like I have other altcoins that are a low market cap. They're so much more volatile, so much more up and down, okay? And that's typical. But here, you really see strong market structure. So again, I'm not telling you what to do, but I bought a little more bunk. I'm buying this on spot because I always buy low market cap things on spot because they're too volatile to trade otherwise. And I mean, this is going to pay off very well. Likely very, very well going to, or it's very likely to pay off very well. Okay, once it marks up. Again, this is the cause, this is the effect. You don't need to wait to get your umbrella to find shelter when you see the clouds, when you hear the thunder and the lightning, and you see the lightning, and you feel the air getting thick, right? You don't need to wait for it to start pouring, right? You understand what is going to come. Same thing here. If you read charts and you look at accumulation, and you read accumulation, that's the cause, this is the effect, as Wyckoff called it. We see very clearly 2 degrees of AB basing in a pivot. There's really no other example that I can show you of 2 degrees of AB basing in a pivot that's cleaner than this chart. Bunk right here. So, yeah. I'm not charging for any of this, nor do I care to. I don't typically really understand if people are so profitable at trading, why they need a charge for their YouTube or their information, but whatever. That is a great call. If I had to charge for calls, I would say buy bonk at any point here, any point in this channel, and thank me later. Okay, that's all I would say about that. All right, moving on. We have a dent. Let's go on to the small time frame again, because large time frame, I think you guys get the point. Small time frame, again, you have these channels that have been forming for 4 days, right? And they've just been going up and down. But in them, sorry, this is not the whole channel. This is the whole channel. In them, you can read 2 degrees of AB basing and a pivot. It's an accumulation channel, more likely than not, okay? Never 100% on these. Hard to read them 100%, but more likely than not, it's an accumulation channel, okay? Initial degree, initial break of structure. You have your B wave right there. That's your first degree. Your second degree, I think, is something like, I think this is your second degree A wave, all this, and then this is this pivot, this zigzag is your second degree B wave, and then this is your pivot right here. This is your breakout right here, as I read it. 5, 3, 5, 3, 5, and then so on and so forth. again, you can just channel this, and you did break down a little bit below the range low, but that's normal. That's what the Wyckoff people would call a spring, or fishing for liquidity below support, and you find some resistance at the midline. Whoops, at the mid. Let's try that one more time. The midline, but that's to be expected. Consolidating at resistance and then breaking up and out. Okay, so that's dent. Same thing, same read. Okay, and that's kind of why we look at Bitcoin as a proxy for the cryptocurrency markets at large. Again, past few days have been sideways, and this is a great example of that in Dodo. See that very clearly, going up, down, consolidating at support, more than likely going up. Okay, question is, are you going to go up and finally break this and then continue up, or are you going to stay in the range? Likely that we're going to break the range. Okay, just based off of our high time frame reads, based off of what other assets are doing. So yeah, this is still at support, but few people want to buy at support because it's support and it's scary. Whoops, I forgot to delete that line. If there's anything you guys want to look at, just let me know. This is actually a really good example of what's been going on for the past few days. This Dogecoin, okay? And so when people are saying it's going lower, I don't know how well or how closely they're reading the charts. This is a great example. It's not like Bitcoin where it's kind of like not completely straight. This is completely orthogonal, completely straightforward accumulation, where you came down, you put in that wave 4, right? Or sorry, that initial breakup structure targeting wave 4 of the previous trend, that secondary, right, or that counter wave, that B wave, and then a nice A wave. Look at this. 1, 2, 3. 1, 2, whoops. I would say this is 1, 2, 3. So that's the B wave, and this is the pivot. Okay? So everything here, that's the count, right? I'm going to do that again. 2 degrees of AB basing and a pivot. First degree. Okay? Actually, I'm going to do it in threes. 1, 2, 3. 1, 2, 3. That's your first degree. 1, 2, 3. 1, 2, 3. That's your second degree. 1, 2. That is your pivot. Breakout. Okay? So that's Dogecoin. Past 4 days have been sideways. Ethereum's a little tricky, okay? This is a channel, but it is a downward sloping channel. But it's a channel nonetheless, okay? It's a channel nonetheless. And what I'm going to do, because this is not straight, I'm going to use a tool to illustrate. But I still think we have accumulation in this case. Let's see. I would start counting from here. Okay. And it gets a little tricky, as you saw with Bitcoin. Once it starts sloping, it gets a little trickier to figure out, okay, what are we looking at? But I think this is it. I think this was your wave, whoops. I think this was your wave 4 and your wave 5. And this was your initial break of structure, 1, 2, 3. And then your secondary B wave, or your counter was this. So 1, 2, 3, 1, 2, 3. That's your initial break of structure and your counter. That's your initial first degree of AB basing. Sorry. 1, 2, 3. 1, 2, 3. That's your secondary AB base. Okay. 1, 2. That's your pivot. And this is your breakout. That's how I'm reading it. I'm still reading it as 2 degrees of AB basing and a pivot. This is still an accumulation channel. Nobody says that accumulation channels always have to be straight. Sometimes they're diagonal up. Sometimes they're diagonal down, as in the case of Ethereum in this case. But they're still channels of accumulation. Harder to read, harder to trade when they're diagonal, but still accumulation channels. Litecoin. Right? You can see that. Not much has been done. You can trade this as a 1, 2, 3, or you can look at this rather as a 1, 2, 3, 1, 2, 3. That's your initial break of structure. And the counter, this is your secondary. I would say it comes down all the way here, right? Is that even legal? 1 second, let me check. I'm just going to pull the Fibonacci retracement on that purported secondary A wave, and just barely. No. Okay, I got it. It goes like this. 1, 2, 3, 1, 2, 3. Okay, so that's, and then this is the pivot. This pivot is what came down below the support level. So, do you see that? Again, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. So that's 2 degrees of wave basing and a pivot. 1, 2. Breakout. The more you look at these, the more you count these, the more you trade these, prove to yourself that this isn't just theory, this exists. And after these accumulation levels, price tends to break out. The more you recognize them, the more you can use them to trade, okay? That helps a great deal. There's so many people that have no idea what even an accumulation channel is. For them, everything is either up or down, and we're going sideways. It's just noise. They have no idea what to do with sideways markets. And so in sideways markets, if they're not trading them, they don't know how to enter, where to not enter, what violates or what invalidates them, and all that stuff. So this is why it's helpful to learn the theory, because eventually it can play into how you trade. You can use information to trade, gain entries, or use this to make entries, rather. Ooh. Okay. Yeah, I think this is another range of AB basing. Okay. I'd say 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and this is a pivot. 1, 2, 3, 1, 2, 3. That's the pivot, and then breakout. Okay. Again, same thing with SHIB. Last 4 days, it's been sideways. You know, that's why some people are saying up, some people are saying down. Most people are saying down because we came into the accumulation channel from an impulse, right, to the downside. But that was a small time frame corrective impulse to the downside. It wasn't part of the trend. It was part of the counter trend. And so they think this is going to be a bear flag in continuation because people can't read, you know, they can't distinguish trends from counter trends. So yeah, a lot of the market's going to be caught off sides, so much so that if you check, and let's just check really quickly. If you check the long versus shorts, I'm sure you can see exactly that. You can see most people are short on the market, and if they're not short, it's because, if they're not short, it's because they've been squeezed long. They've been forced to go long because their stops or liquidation points have been hit. Maybe not yet, but that is likely to happen. Let's see. Sorry, 1 second. So if you go here, long versus shorts on CoinGlass, you can see what I'm talking about here. So in the past, the past 24 hours, you can see most people are short. Okay, so most of the market is short Bitcoin. Most of the market is short, period, right? And they think we're going down. That is really good, actually, if you're long. It tends to be that the market is going against where most people are positioned before the move happens. And then once the move happens, everybody kind of switches during the trend. You see what I mean? Just have a quick look on the DXY, what it's doing. seems to be making its way down, slowly. DXY seems to always move slowly, but this was important. This was very important. This rejection on resistance was huge, absolutely huge. All right, let's keep going on our altcoins. But I hope you guys see a story and see the story in the market, right? The market tells a story, and the story is rather, the past 4 days is accumulation, has been accumulation, or what looks to be accumulation in this channel going up and down. And you can read 2 degrees of AB basing and a pivot. That's my first degree. That's my second degree. Secondary. Let me try that again. 1, 2, 3, 1, 2, 3. First degree. 1, 2, 3, 1, 2, 3. Second degree. So first degree, second degree, pivot, breakout. That's how I read Shiba Inu. Synthetics. Very nice. Same thing, but except synthetics is a little bit ahead, okay? You can see the same thing. Past 4 days, up and down, okay? Here we can read it like this. 1, 2, 3. 1, 2, 3. Okay? Sorry. Let me see. Yeah, something like that. 1, 2, 3. And then... Ooh. No, it's 1, 2, 3. It comes all the way down here. And then it goes 1, 2, 3. Or actually... 1, 2, 3, and then this goes 1, 2, 3. That's a zigzag. Is that correct? Let's check. Let me check. No, that can't be it, because if this is secondary A wave, this B wave has broken that phi ratio. It can't be that. It has to be this. Okay, this has to be the secondary A wave all the way here. All of this. So 1, 2, 3, 1, 2. All of this. This is why this shit is tough to read. Whoops. 1, 2, 3, 1, 2, 3. So the first degree is over here. 1, 2, 3, 1, 2, 3. And then the second degree, 1, 2, 3, 1, 2, 3. It has to be that. Okay, and then the pivot is actually all the way up here. The pivot's a zigzag. 1, 2, 3, 4, 5, and then 3 waves at the 0618. Okay, so that's pretty much what I'm reading. See, again, it's tough to read these things because it's not always that the first degree is the biggest. It's not always that the second degree is the biggest. And then look at this second degree A wave. Look how complex this is right here. This second degree A wave was likely all of this. I mean, like, that is crazy, right? But usually you realize, or you can read these after they've formed. It's hard to form, or it's hard to read as they form. But more practice, maybe, it's possible. In any case, you get an edge. You get an edge. You're just looking for an edge. You don't have to be perfect. You're just looking for an edge. Again, most traders are short in this market. That's not conjecture. That's not hyperbole. We saw the data. You look up and down your YouTube feed. Most of your favorite YouTube analysts, crypto analysts, Twitter sort of influencers are telling you to sell. We're going down to 20K or 18K or whatever. And they're all surprised when we found support by dipping right below support, right? They're all surprised because they didn't realize the accumulation range, and maybe they're not even zoomed out high time frame to formulate a bullish bias. Anyway, Tron has been doing the same thing, but in this range, look at that. And this Tron is particularly bullish. Why? Because look, it did not even come and need to come below support to capture liquidity. It's just put in a really run-of-the-mill. This is actually a 1, 2, 3, 4, 5, 1, 2, 3. It's a zigzag, and then 1, 2, 3, 1, 2. Let's do that again. Yeah, 1, 2, 3, 1, 2, 3. Okay, so that's degree number 1, degree number 2, and my pivot may be finished over here. Like 5 waves up, 3 waves down. So that is Tron. When it finishes all of this and it breaks up and out, it's going to go. This is probably going to be one of the first ones to put in that 50-60% move to the upside. Don't be surprised if Tron does that. XRP is another one of those that put in a non-orthogonal accumulation. Okay, so this is accumulation, but diagonal accumulation. Tough to trade, very tough to trade. But you're still looking at a range. And that range can be measured with the Fibonacci retracements. Something like this, yeah? Where this is your initial break of structure. This is your B wave, that's your first degree. Your second degree is something like this. Okay, and then your pivot's right here. So, degree 1, degree 2, whoops, degree 2, pivot. I know this may seem boring, and I'm not looking at the price on the minute chart, but I promise you, repetition, understanding, like incorporation of these ideas and making them your own, and really not just like, you know, knowing it intellectually, but like looking at charts over and over and over and over and over again, reading them, seeing these on different assets, seeing the same patterns over and over again, being able to read them for yourself, and then trading them, actually putting money on the line so that you're emotionally invested in being able to read these properly, and then trading them. It will change your life, quite literally. Like your analysis, you have a tool in your arsenal that few traders have. Because most traders, if you turn off their indicators, they can't really read the markets, right? Indicators are fine, but you do not want to be beholden to indicators, because indicators, like everything else, have to be interpreted. You want to be able to read price action. You want to be able to read price action independently. This is also a really bullish one, Zilliqa. Why do I say that? It's because this 3-wave move, this is a type of 5-wave move with a really, really long wave 4. Okay, so this is a good example of how zigzags look like messy impulses. Okay, both zigzags, which is a 5-3-5 corrective pattern in Elliott wave theory, they will have the element of your impulse wave. Okay, so but the thing is that impulse wave is corrective. Now, based off of my experience, only corrective impulses, right? Corrective impulses, or zigzags, it's another way to say it. Only corrective impulses look like this. Like, it's very rare that you see a clean, straight, pure impulsive wave that looks something like this, right? Do you see that? Like 1, 2, 3, 4, 5. Like that wave 4 is super, super long. But at the end of the day, what you get is that 3-wave move down to the 0.618. So that's big A, that's big B, that's your first degree of AB basing. This is your second degree right here. Okay, it's flat correction. And then I think your pivot is either here or still forming. Okay, that's what I see with Zilliqa. But again, Zilliqa's bullish in the sense that it held market structure, didn't dip below support to fish for liquidity. So there's plenty of liquidity. That's what this market is telling. This chart is telling you there's plenty of liquidity in this market for a markup. V-Chain. Okay, same idea. 2 degrees of baby basing in a pivot. Count it with me. 1, 2, 3. 1, 2, 3. 1, 2. Ooh, how do you do this one? I would say 1, 2, 3. But this, if this is the small b, it's come a little too far down. Okay, I get it. It's got to be... Okay, I see it. It's like... This is like a massive puzzle. It's like a massive puzzle, and you just have to see the patterns. This is a running flat. This B wave this is a zigzag. It's a 5-3-5, and this B wave is a super running flat. Do you see that? So that is your small a, and your small b is that. I think that works. Let's see. Take the Fibonacci retracement level from the bottom. It doesn't work. Do you see how it doesn't work? We can have a thesis, but it's invalidated by the math. The math has to work. And what's the math? The math says that that B wave has to be within the phi ratio, the 1618 Fibonacci retracement level of that A wave. So that can't be it. So it's back to the drawing board. Okay. The only other thing I think it could be is that your first degree is here. Okay. It's actually all of this. And your second degree is all of this. So you can start measuring your second degree from here. This point right here. From the bottom here all the way to the top. And you just barely make it. You wick the 1618, but it's illegal. 1618. Okay, all I'm saying is V-Chain, unlike, what we just looked at, Zilliqa, is looking weak. It looks like it needs liquidity. So it's all the way, it's fishing for liquidity towards the bottom of its channel. Okay, but do you see how I kind of did that? You can have a theory on it, and you can test it and see if it's valid, see if it's legal. Theta, same thing. You got a range, 1, 2, 3, 1, 2, 3, 1, 2, 3. I hope you see that zigzag right there. That's the running flat B wave for that zigzag. It's a 5-3-5, and then this is 1, 2, 3, another zigzag to the downside, and then this is your pivot. And then this is your breakout. And like a lot of assets, you fished for liquidity below the support of the range. So that is theta. Telcoin. This is another one that's kind of it's a range, but it's leaning, right? It's a leaning range. Tougher to read, but it's not impossible to read. Yeah. 1, 2, 3. Actually, let's read it like this. 1, 2, 3. 1, 2, 3. Okay, that's your first degree. 1, 2, 3. 1, 2, 3. Pivot, breakout. Okay. Matic, same thing. You have a range, but it's a bit slanted, but you're doing the same idea of accumulation. And I believe you're starting here. Yeah, you're starting here. That's your first degree. And all of this is second degree A base. All of this is the second degree B base, I think. And then this is the pivot, and this is the breakout. So that's what I'm seeing with Matic. DYDX. Boom. That's your first degree. 1, 2, 3. 1, 2. No. Sorry. 1, 2, 3. That's a 5-wave move. 1, 2, 3, 4, 5. Okay, so it's 1, 2, 3. Okay, so that's 2 degrees of AB basing and a pivot. Pivot. Where's that pivot? It's right here, but I'm trying to figure out what it looks like. Okay, I see. It's a A, and then this is the B wave of the pivot. Okay, got it. And then the breakout is happening just now. In Harmony, this is a little straighter, or a little more straight. First degree, second degree, pivot, boom, breakout. Now, let me just say, if this wasn't a breakout, what you would see is you would break the bottom support of these ranges, retest them as resistance, and then go down, just like we did up here. Okay, remember, we were saying this could possibly be an accumulation range, but what happened, we broke the bottom of the support range, retested it as support, broke the support, retested it as resistance, retested it as resistance, and came down. So we're essentially confirming that, we lost this level right here by retesting it as resistance. MOVR. This is a little different. I believe to understand MOVR, Moon River, you have to zoom out a little bit. Okay? Here is one example where it hasn't been in a range for the past 4 days. Past 4 days, you've actually been in this wave 4. And you broke down from this wave 4 again. You break down, you retest as resistance, and now you find a new level. But what you're getting here is a small time frame version of an accumulation range. But this isn't bearish at all, because if you zoom out, you notice that Moon River is putting in a really nice, really clean flat correction. Do you see that? 3 waves, 3 waves, 5 waves, 2, 3, 5, flat correction. And that flat correction is perfect for this. 5 waves up, 3 waves down. 5 waves up, 3 waves down, or some version of 3 waves down, and then you can continue going that way. So very bullish on the higher time frame. And the other really bullish thing about this is that you broke resistance, the resistance of the bear market accumulation, retested it as support once, retested it as support twice, using, well, let's say once. You retested it as support. You can also look at this as a inverse head and shoulders, a cup and handle pattern. Yeah, that would be a cup and handle pattern where you broke resistance and retested it as support. 1, 2, and then you go. So lots of ways to look at this. If you zoom out, there's nothing bearish about it. The tricky part is, on the smaller time frame, what do you make of it? How do you enter your trades if you're on leverage? But if you're not, if you're just doing spot, it's, buy support. You can buy support without fear on spot because you're never threatened with losing your position. Yeah. But yeah. So like I said, past 4 days, the bulk of the past 4 days have been in this wave 4 accumulation or wave 4 distribution, whatever you want, intra-wave correction, and then you fall out of it for that last and final wave. And then here on the smaller time frames, you have a version of an accumulation range. So let's go on the 5-minute time frame, and we should be able to see a version of an accumulation range if that is accurate. Because what do we know? Like, these accumulation ranges, they're not optional. You have to put them in 2 degrees of AB basing and a pivot on any time frame when you change the trend from up to down or down to up. Yeah. So here I would say you have your first degree, your second degree, what do I keep saying that? Your first degree A, first degree B, second degree A, second degree B. So you see that? And this, most likely your pivot is come down below your support level, grabbing excess liquidity or extra liquidity, not excess liquidity, but a little extra liquidity, marked up, broke the top of the range, retested it one more time, is retesting it, and now the big markup comes. Now that you've conquered this level and you adequately retested it, old resistance as support. But you see, you jump on the smaller time frames, you will see some version of 2 degrees of AB basing and a pivot. But yeah, we haven't been in this for the past 4 days. But still, it's the same concept. Okay, let's move on. Chain link. This is very similar to what we just saw. In Moon River. Okay, in past 4 days, chain link has mostly been in this complex wave 4 correction. Okay, complex wave 4 correction, intra-wave correction, very, very tricky. Can be read as an accumulation, but at the end of the day, it proves to be distribution. Okay, 1, 2, 3, 4, and then you put in wave 5 here. Okay, and so that's chain link. You fell out of this, and as always, you lose support, retest it as resistance, retest it one more time, make sure that that's resistance, and then you finally reject, and you hit the target. Okay, so for people that are really bearish, I mean, yes, you can do that again, but you did hit your targets of your first range. So if you just measure it, right, you're pretty much there in that new range below that initial range that you were in. And much like Moon River, if you go on a smaller time frame, you should be able to see some version of 2 degrees of AB basing and a pivot. It's fractal, yeah? It happens on every time frame. 2 degrees of AB basing and a pivot here. First degree A, first degree B, second degree A, second degree B. Markup, I think this is a complex wave 4 correction. Consolidating at resistance, you pop up, retest, and you continue. That's my read for chain link. Dot. I think dot is in the same. So all of these are kind of the same. Same as Moon River. Yeah, I would say same as Moon River. Same as chain link. You were in that wave 4 complex correction. It broke down. And now you put in accumulation channel. And you should be able to read an accumulation channel on the small time frames. Okay, so the interesting thing here is, instead of 5 waves down, I think you have some version of an ending diagonal. So you have 3 waves. 1, 2, 3 waves, right? So you have a zigzag down, which is impulsive. Yeah, that's what it looks like. So let's see. Whoops. Yeah, it's very, very likely that that's the case. Let's just confirm that um, ending diagonal thesis. If that were true, that this was, instead of a 5 wave, right? Because we broke down from this wave 4, or what we purport to be a complex wave 4 correction, and we got 1, 2, 3 waves instead of, our expected 5 wave sequence impulse. If that's true, then we should see that up here for waves 1 and 2 as well. 1, 2, and 3, yeah? So let's zoom in. Okay. Yeah, it looks like that's the case. Let's even go in a smaller time frame, go on the 5-minute time frame. You should be able to see it. I don't know if you can see it here, but do you see how you don't have 5 waves, you have 1, 2, 3 waves here. And then that wave 2 is 1, 2, 3. And then that wave 3 is 1, 2, 3. Okay, I think that is what you're dealing with here, an ending diagonal. So having seen that earlier on in the impulse, I think it is likely that that read that we have is correct. So this was your wave 5 in three motions. 1, 2, 3. That was your final impulsive wave, and so your initial break of structure. So just jumping down on a smaller time frame. Yeah. Yeah, perhaps something like this. First degree A, first degree B, second degree A, second degree B to this point right here. And then the pivot is this. Okay. I think that works. Yep. And that works with the retracement levels. I'm just going to check second degree A. And yeah, that works quite easily. Okay, so that's my count for what's been going on with Polkadot. And I do believe by that count that this is your impulse, and this is some sort of wave 4 complex correction, and you should eventually pop out. Obviously you pop out, you retest, and then you go. Okay, so that's what I'm seeing. I want to look at the volume for a second. Again, volume isn't that helpful these days in crypto with all these different exchanges, but typically in these long drawn out consolidations you see very low volume until you get a breakout, and then you get the breakout volume, and then here also this volume candle is capitulative volume candle. I brought this up earlier in the stream. You typically see this at the end of a trend. So if this was indeed wave 5, that would be consistent with a wave 5. So that's I don't know. I just felt compelled to bring that up since I brought volume up earlier in the stream. All right. Key. All right, and this is the last one. Super, super, super volatile. So this is the type of asset that I look at on higher time frames. But on a higher time frame, the past, few days, you can also see some sort of consolidation, reversal, accumulation channel. All right. I think it's here, right? It's a little more messy. I want to zoom out even more. to make sense of all of this. Let's go on the daily really quickly. Okay, here it's quite clear what's happening, right? You're basically on a high time frame. You put in this massive move up, and then you just correct it in 3, right? That's the simple read, right? Easy enough. 5 waves up, 3 waves down. The 5 waves up take as long as the 3 waves down. That gives you a lot of confidence to go long on this as an impulse, right? So that's pretty much how I would read it. When you're so volatile and you have a lot of wicking, it's hard to analyze it on the small time frames. I just stick to the higher time frames and just look and see, okay, we're at support. And what's that support? That support is the neckline of this this cup and handle, right? It's a cup and handle. And that's it. Guys, I hope that was helpful. I hope that was useful. Hope you're well positioned in the market. And I hope we're finally gonna get our breakout soon. Been waiting for this for quite some time. Let's look at Bitcoin. Okay, looks like we're just now working on that midline, which was resistance that we were consolidating at. And as we always say on the channel, consolidating at resistance is bullish, right? Doesn't mean we're rejecting from it. It's essentially basically flagging, yeah? On the small time frame, I think it's clear to see. And it ends up looking like just like that, a flag, right? Whoops. Like, it ends up looking like a bull flag with consolidation and then breakout. So that's pretty much it, guys. Hope that was helpful. Hope that was useful. Like, share, and subscribe. And I will see you tomorrow at the usual time. I was a bit late because I was working. And, you know, when the market's very volatile, I'm working, I'm building positions, or I'm managing positions. So I just couldn't stream. All right. Take care.